We're watching the next phase of tokenization happen right now in front of us today. And this time it's much closer to you or I. For the last several years, we've watched the financial industry focus heavily on RWA tokenization or real world asset tokenization. Guys, we're talking treasuries, funds, bonds, securities, and now tokenized stocks. But think about what all those things have in common when we really boil down what's happening. They're primarily sitting towards the top of the financial system. Their assets, their collateral, their things being traded, settled, or held by the financial institutions and investors. But now something different is happening. When we look at it, we're starting to see tokenization move down the financial system towards the banks, towards payments, towards payroll, and ultimately towards your very own bank account. I like to call this the money funnel. Once you see the financial system this way, I think XRP, XLM, HBAR, ZBCN, DTCC, the NYSE, and even what JP Morgan is doing is starting to fit into the much bigger picture. So let me show you what I mean. So at the top of the money funnel, I imagine the entire financial system as a giant funnel. At the very top are enormous pools of assets, stocks, treasuries, bonds, money market funds, real estate, collateral, and other real-world assets. This is where some of the largest financial institutions in the world operate. And this is also where tokenization has been gaining serious traction. One of the biggest examples is the DTCC, and remember who we're talking about here, guys. The DTCC isn't some random blockchain startup. The DTCC provides critical post-trade infrastructure for traditional financial markets, and now the DTCC has been developing infrastructure for tokenized assets. This includes its DTC tokenized service and its collateral app chain. The collateral app chain is particularly interesting because the DTCC has discussed infrastructure capable of supporting things like tokenized securities, stablecoins, tokenized money market funds, crypto assets, and other tokenized instruments. Think about what they're actually doing here. They're creating the infrastructure where the financial assets can potentially become more programmable and easier to transfer and use as collateral. This is why I put DTCC towards the top of a money funnel. They're not alone here, guys. Now let's look at the stock market. Look at what's really happening with the New York Stock Exchange. The NYSE related exchanges have filed regulatory proposals addressing securities, trade, and tokenized form. And there's an important distinction here, guys. When I say tokenized stock, I'm not necessarily talking about somebody creating a random cryptocurrency that follows Apple's stock price. That's definitely not the same thing. We're talking about actual securities where ownership can potentially be represented by using blockchain or distributed ledger infrastructure. In other words, Apple doesn't need to disappear. The stock doesn't have to disappear. The economic asset can remain the same. What changes is the infrastructure underneath it. And that distinction is extremely important when we really think about it, because the story isn't necessarily crypto is going to replace the Wall Street. The story could actually become Wall Street adopts blockchain infrastructure. And guys, that's a completely different conversation than we've been having in the past. And now our funnel starts to get more interesting when we put it together. Because once you see tokenized assets being on chain, you create another problem. What about the money? Imagine buying a tokenized security. The asset can potentially move using blockchain infrastructure. Ownership can potentially update rapidly. Settlement can become more programmable. The infrastructure could eventually operate beyond traditional market hours. But what happens to the money on the other side of the transaction? If the asset becomes digital, the cash leg of that transaction needs the infrastructure capable of keeping up with it. And that's where tokenized deposits become extremely important, because now we're no longer talking about tokenizing Wall Street assets. We're talking about banks potentially tokenizing money sitting inside the banking system today. And JP Morgan gives us a great example of this. JP Morgan has developed JPM Coin as a bank issue deposit token. And this distinction matters. A tokenized bank deposit isn't automatically the same thing as Bitcoin, right? It isn't necessarily the same thing as traditional stablecoin either. Think of it as digital representation of a commercial bank deposit that can operate using blockchain infrastructure. Now look at that funnel again. First, guys, we have the tokenized assets. Then we have tokenized securities. And then we build tokenized settlement and collateral infrastructure. And guys, now we tokenize the bank deposits. We're moving further down the funnel as we speak, and we're getting much closer to the consumer by doing so. Now let's look at XRP. This is where I think people need to stop looking at cryptocurrency projects as if every blockchain is trying to accomplish the exact same thing. The XRP Ledger. We've already seen tokenized real-world assets on the XRP Ledger. One example is Ondo's OUSG, which provides exposure to short-term U.S. government treasuries. Qualified purchasers have been able to mint and redeem OUSG on the XRP Ledger using RLUSD. Really think about what's happening here. You have tokenized real-world assets and digital money operating within blockchain-based financial infrastructure. That's a glimpse of the asset side and the settlement side can begin working together. And that's why I continue watching XRP and the XRP Ledger from the perspective of liquidity, tokenization, and settlement infrastructure. But let's move further down the funnel. Look at Stellar, guys. Stellar gives us another great example. Franklin Templeton has used Stellar for its tokenized money market fund ecosystem. So once again, we had traditional financial assets represented using blockchain infrastructure. But Stellar has another important piece of the puzzle. We're talking about payments. Moving value between institutions and businesses and individuals has always been a major part of Stellar's design. This becomes important because eventually these tokenized assets and tokenized forms of money need to interact with the world economy. And there's actually another connection here, guys. ZBCN has announced streaming payroll infrastructure on Stellar. Keep that in mind because we're about to go to ZBCN, but first we need to talk about Hedera. Hedera and tokenized deposits. Hedera is another network I've been watching from the enterprise side of this transition. And Hedera specifically discusses tokenized bank deposits as a payments use case. The concept is straightforward. A bank issues a digital representation of deposits backed one-to-one by fiat, while the underlying relationship remains within traditional banking and regulatory framework. Now think about how different that conversation is from crypto 5 or to 10 years ago, even 3 to 4 years ago. We're not talking about destroying bank accounts. We're talking about potentially putting their own deposits onto blockchain infrastructure. That's a major distinction. And that's why HBAR Hedera becomes interesting in this conversation. Hedera hasn't spent years positioning its infrastructure around enterprise tokenizations, payments, and institutional use cases. So now we've moved from assets to securities to settlement to bank deposits, but there's still one more layer we need to discuss, which is you, resale, everyday user. And ZBCN is at the bottom of this funnel. And this is where ZBCN becomes extremely interesting. I want to make something very clear here, guys. I'm not saying ZBCN is a bank issuing tokenized deposits. That's definitely not the point here. I'm looking at ZBCN as an infrastructure sitting much closer to the consumer. Because when we think about it, they're solving payroll, payments, cards, on-ramps, off-ramps, and ways for digital assets to actually become usable in everyday life. Remember what we just discussed with Stellar. ZBCN has announced streaming payroll infrastructure on Stellar. Now think about the entire money funnel here. At the top, you have institutional assets. Those assets become tokenized. Then you have securities, collateral, settlement infrastructure. The banks begin experimenting with tokenized deposits. Then you move into payroll, payments, cards, and finally, the consumer, you, retail, that's you and I, that's us, everyday users, the bottom of the money funnel when you really think about it. Now let's put the whole system together. Here's the big picture. The DTCC is building tokenization infrastructure around institutional financial assets and collateral. New York Stock Exchange and related exchanges are now addressing how securities can trade in tokenized form. XRP Ledger is already supporting tokenized real-world assets and digital settlement assets. Stellar has tokenized financial assets while also focusing heavily on payments. Hedera is building enterprise tokenization and payments infrastructure and explicitly identifies tokenized deposits as a use case. And ZBCN is is building much builder closer to payroll, payments, cards, and the consumer interface. These projects do not do the same thing. They do not necessarily have to replace one another. They could represent different layers of an increasingly tokenized financial system. That's the part I think is getting lost when we think about the crypto market. Everyone is asking which blockchain wins, which crypto project, but what if that's the wrong question we're asking? Maybe the better question should be, which infrastructure connects each layer of the new system together? Because the future could be interoperable. It will be interoperable, really. One network handles tokenization, the other handles liquidity, the other handles settlement, and the other handles payments, and applications abstract all of that away from the consumer. You may not even know which blockchain is being used as a retail user. Just like today, when we think about it, most people have no idea what infrastructure moves their debit card payment system. They don't know what the ACH is right now, automated clearinghouse. It all works together. And this is why I believe tokenized bank deposits are such an important development to watch. We've already spent years talking about putting assets on chain. Now we're moving towards putting money itself onto compatible digital infrastructure. And if that continues, the money funnel will eventually look like this: institutional assets, tokenized securities, collateral and settlement, tokenized bank deposits, payroll and payments, and then finally, you, the everyday user using crypto. Wall Street started by tokenizing the assets. Now banks are beginning to tokenize the money. And the next major phase of blockchain adoption may not look like people abandoning their bank accounts and suddenly becoming crypto experts. That'd be hard, right? It'd be just about impossible. It could be much simpler than that. The bank account itself changes underneath them, and most people may never even realize it happened. This is why I'm watching XRP, XLM, HBAR, and ZBCN. Not because I'm saying these 4 projects will control the entire financial system. Of course not, that's ridiculous. But because they give us examples of different layers of the infrastructure being built around this transition. And guys, if Wall Street has already started moving assets onto tokenized infrastructure and bank accounts are now exploring how deposits can move on a similar infrastructure, think about the question here. Is your bank next? When we think about it, we put all this together. Could you see your bank going on chain here? We're hearing that we have Bank of America, Wells Fargo, Chase, Citi. All these banks are already going to tokenized deposits. So when we put all this together, guys, are we going to see tokenized deposits being one of the final things we need to put in place before true adoption happens? Because when you look at the funnel, as I call it, you look at the funnel from the top to the bottom, they've already tokenized and moved majority of it on chain. Now it's coming down to the everyday user, and we're seeing a project like ZBCN being extremely hot this year, getting ready for this. But you guys let me know what you think down in the comments. Before I gotta let you guys go, hit that like button if you like this kind of reporting where we give you a different kind of way to look at the crypto market as a whole. Please consider subscribing to the channel. We do bring you different ways and facts to look at this market. Before I let you guys go, take care of yourself, take care of the people around you, become the change you want to see in the world, guys. I will catch you on the next one.